to be the season for companies to go to the stock market and issue new shares as a way of raising cash. Perhaps we shouldn't be too surprised. There's been quite a stock market rally in recent months, and as a result, companies get a great deal more money for the same number of shares. Should we be concerned? Professor Meziane Lasfer thinks we should. He's Professor of Finance here at CAS, and he's just completed a major study on this issue. I asked him first of all how he went about this study and then what he found.
Well, the idea is, first of all, to look at the difficulties faced by companies. When they come and raise capital, they have got so many costs, not only the cost that they pay to the investment banks, but also the market reaction on the announcement, in the sense that when you announce the seasoned equity offerings, we notice that share prices usually drop because they convey negative information. The investors do not trust you, do not like you to raise capital, because then when you raise capital, they cannot have any control on what you are going to do with it. So in order to, the companies, they need to think carefully about how to attract those shareholders when they raise capital. So how can they make those investors put their money in the company and have confidence in their own company? At time of crisis like we have now, it becomes extremely difficult because, first of all, the investors, they have lost kind of faith in the market to see the share prices of especially the banks coming down about 80%. So if you lose your 80% of your wealth, it is a kind of a disaster. The investors also, they don't have confidence in the future. So therefore, when they give you, if I am the investor and you are the company, you come to me and ask me for some more funds, I need to make sure that I'm going to get a return on those funds. That return is a function of the risk in the economy. So if the economy is very risky, I'm not going to be willing to give you the money.
That's the thing, because seasoned equity offerings, rights issues, were seen by investors as a nice thing, a way to make some free money. And that's not really changed even in the wake of the financial crisis.
Well, no, what we notice is that if you look at the past, exclude this financial crisis where we have a significant amount of risk that is involved. But if we look at the past, and many studies show that when companies raise capital, if you the post announcement, in other words, after they announce 2 years or 3 years after, we notice that their share prices really come down quite significantly. The main reason is because maybe they are not going to invest carefully that money. So I, as an investor, I give you funding, but you are not, and I trust you. You tell me that you are going to invest it in good projects, what we call the positive NPV projects. But in the end, you are going to not to invest it in good projects. So I'm going to be reluctant in putting my money in your company.
So you're saying in the medium term, share prices are likely to fall. So is that really advice to investors to sell on the day the new shares come to market?
Definitely, that's especially in the UK. What we have, the UK is a very special case in the sense that to come and raise capital, you have to use the rights issues. Except if you raise less than 5%, where you can put placements, when you can use the placement method. But with the large amounts above 5%, you have to have you have to have rights. So you give rights to the shareholders. If they don't want to participate, they can sell the right. However, those rights, they guarantee you not to lose money just on the short time period. But if you look at the long term, you are still a shareholder in my company. Your wealth, suppose, is 100 now, but then after the rights issue, the share prices are going to go down, and your wealth may end up at 60 or 50 or 40. In that case, you have lost, even though you haven't lost in the rights because you have sold the rights and you got some money, but in the long run, the performance of the company is negative. So that company isn't performing. The implication of this is that when companies raise the capital, they may not use it efficiently. So what we refer in the literature really as the agency conflict between the managers and the shareholders there.
Isn't it safer for companies to raise new money with a rights issue rather than gearing up, taking on debt, which in this climate potentially could sink them?
That's a very good point. In fact, even debt now, maybe they cannot find it because the banks and the debt market is really down. So therefore, they don't have this choice. So the alternative will be only through rights issues. or through equity offerings. However, you have to be careful. Well, what we need to think about is how can we make the shareholders participate in those rights issues. I mean, we saw, for instance, I think about a year ago, Royal Bank of Scotland, where only about 10% took up the rights. So the government and the underwriters ended up with huge amount of shares that are really worthless. So therefore, we need now to think about another alternative to the rights. Although the rights, they preserve the ownership of the shareholders, the existing shareholders, however, they cannot guarantee you as a company to get all the funding that you need. So therefore, there is a need to think about another method that will allow the shareholders or motivate the shareholders to come up and put in their money in your company.
So do you have any proposed solutions?
Yes, that is research, in fact, that we have done, and we used, in fact, the French market, because the French, in France, there are a number of companies that are doing it. We refer to it as unit public offerings. In other words, when companies come to raise capital, they don't only issue shares, but they issue shares and they give also an option to the shareholders. So it works as follows. Suppose that you want to raise £1 million, but the shareholders, they cannot trust you with £1 million, because maybe your project is not going to cost you immediately £1 million. It may cost you only, say, £500,000, okay? So the company will say, okay, I'm going to raise today £500,000, but I give you as a shareholder an option to buy some additional shares, say in 2 years' time, when I need the remaining £500,000. Okay, I give you the option, which we refer to as a warrant, so that you will subscribe to those new shares only if the share price is above a certain level, above the exercise price. If I'm doing badly, if you see as a shareholder that I'm doing badly, you are not going to be committed to put the remaining £500,000. So this what we refer to as the unit public offerings, or the where you get shares and warrants, will allow the companies to overcome this problem of non-confidence with shareholders. At the same time, the shareholders can sell those shares that they have obtained or they owned before, but they can sell also the warrants. So if they see that the company is very unlikely to come up with a good price in the future, so in other words, the share price to increase in the future, they can sell those warrants. So from the shareholders' perspective, it is a big advantage, because they are not going to commit at 100% to those rights issues, and they've got the possibility of realizing some gains, some capital gains, by selling the warrants. From the company's perspective, it's also very interesting, because they can guarantee, obviously, that the shareholders are going to participate, and they're going to refrain from having cash that they are not going to use now, because they need to use it only in 2 or 3 years' time. So we find in this study, using the French data, that companies are much more likely to opt for these unit offerings when they have the problem of uncertainty. In other words, when they are too risky, when the shareholders, they don't trust them, so they have significant agency conflicts between them. So we thought that with this period of crisis, when there is so much uncertainty and there is so much lack of confidence of the shareholders, it will be very good opportunities for companies that are coming up, really in as many as possible, that are coming up to raise capital now. I think we thought that if they use this possibility, their rights issues are much more likely to be successful.
And anyone who's interested can contact you and get a copy of the report.
Definitely.
Meziane Lasfer, thank you.
Thank you very much.